Every time you tap your card for coffee, buy something online, or send money to a friend, a battle is raging that you probably don't see. It's a silent, slow-motion showdown for control of the global financial system. This isn't just about nerds and new tech. It's about your money. It's a fight over fractions of a penny that add up to billions of dollars, and it will decide if the way you spend, save, and send money gets faster and cheaper, or if the old guard keeps its iron grip. For decades, one name has dominated this world: Visa. Its network is the invisible plumbing of modern life, but a powerful new challenger has quietly entered the ring: stablecoins, or as they're often called, digital dollars. And here's where it gets interesting. These digital dollars are no longer just a niche experiment. In 2024, for the first time in history, the total transaction volume of stablecoins actually surpassed that of Visa. This wasn't a fluke, it was a tectonic shift, a sign that the very foundations of money are starting to move. But here's the twist. The company that might just bring this revolutionary technology to the masses isn't some scrappy startup, but the very giant it threatens to disrupt: Visa itself. Quick coffee sip, then we dive in. To really get how huge this is, you first have to grasp the sheer scale of Visa's empire. For over half a century, Visa has built a system that connects tens of thousands of banks and millions of merchants in over 200 countries. In 2024 alone, Visa processed a massive $15.7 trillion in transactions. It's a system built on trust and reliability. When you use your Visa, you just know it will work. But that convenience has a hidden cost, a cost you don't see, but one that hits businesses hard, especially small ones. And that brings us to the core problem: interchange fees. Every time a card is used, the merchant pays a swipe fee that can range from 1.5% to 3.5%. That might not sound like much, but it adds up. For a small coffee shop or a local bookstore, these fees can be one of their biggest expenses. If interchange fees were an employee, they'd often be the highest paid person on the payroll. Why are the fees so high? Because the system is a mess of middlemen. A single payment has to bounce between the merchant's bank, the card network like Visa, and your bank. Each one takes a cut. On top of that, it's slow. The payment at the counter feels instant, but the actual money can take days to get to the business. For decades, that was just the cost of doing business. There was no other way. Until now. Enter stablecoins. The name sounds technical, but the idea is simple. They're digital cash. Think of a US dollar, but instead of paper, it's a token on a blockchain. The most popular ones, like USDC and USTD, are backed one-to-one by real dollars held in reserve, so their value doesn't jump around like other cryptocurrencies. One digital dollar is always worth one US dollar. For years, stablecoins were just for crypto traders. But in the background, their power was growing like crazy. Because they run on modern blockchain networks, they can do things that traditional payment systems can only dream of. First, they're incredibly cheap. Instead of a percentage, a stablecoin transaction can cost just a fraction of a cent because it cuts out the middlemen. A payment goes directly from one digital wallet to another, almost instantly. Now, these fees can vary depending on how busy the network is, with some blockchains like Solana being famously cheap, while others like Ethereum can be more expensive. Second, they're fast. A traditional cross-border transfer can take days. A stablecoin payment gets there in minutes, sometimes seconds. And the system is always on, 24/7, 365 days a year. This combo of low cost and high speed is what caused their use to explode. In 2024, the annual transfer volume of stablecoins hit an incredible $18.4 trillion, surging past Visa's $15.7 trillion for the same year. To put that growth in perspective, just 5 years earlier in 2020, stablecoin volumes were almost 10 times smaller than Visas. And this isn't just theory. Businesses are already using this tech to solve real problems. A company in the US can pay a freelancer in the Philippines instantly without getting hammered by wire transfer fees. The money arrives in minutes as digital dollars, which the freelancer can easily convert to their local currency. It's a game changer for global payroll and business-to-business payments. So with transaction volumes soaring, it seems like stablecoins are about to kill Visa, right? Well, the story is way more complicated, and this is where it gets fascinating. Visa is no dinosaur waiting for an asteroid. It's a savvy giant that sees the writing on the wall. Instead of fighting the new tech, Visa is embracing it. Around mid-2025, Visa announced a major expansion of its programs to let businesses use stablecoins like USD Coin, USDC, for cross-border payments. Here's how it works. Normally, a company sending money overseas has to park huge sums of cash in different foreign bank accounts to make payments quickly. It's inefficient and ties up a ton of capital. With Visa's pilot programs, that company can send a balance of stablecoins to Visa, which then instantly handles the payout in the local currency. The result is a system that moves money faster and frees up capital. This isn't a defensive move. It's a strategic masterstroke. Visa is using its massive global network to become the bridge between the old financial world and the new one. As one Visa executive put it, the goal is to lay the groundwork for money to move instantly across the world. And Visa isn't alone. Mastercard is making similar moves, launching programs in 2025 to let its huge network of merchants accept stablecoin payments. These giants aren't surrendering, they're evolving. They're betting they can absorb the technology, integrating the speed of stablecoins into their trusted and universally accepted networks. Their strategy seems to be, if you can't beat them, join them, and then become the main way everyone uses them. This slow-motion showdown is far from over. The future of payments will likely be decided by two big things: regulation and adoption. For years, the Wild West nature of crypto kept big, conservative institutions on the sidelines, but that's changing fast. In a landmark move, the United States passed the Genius Act in July 2025, creating the first comprehensive federal framework for stablecoins. The law sets clear rules, requiring issuers to hold one-to-one reserves and follow strict anti-money laundering standards. This kind of regulatory clarity is a game changer, giving banks and major corporations the green light they needed to start using stablecoins at scale. With the rules falling into place, the final frontier is mass adoption. While businesses are getting on board, it will take time for the average person to start holding and spending digital dollars. And this is where the battle comes full circle. Companies like Visa and Mastercard, with their crypto-linked cards and deep economic integration, may be the very ones that make stablecoins a household name. The implications are profound. A global payment system running on stablecoins could slash the cost of remittances, empower small businesses, and offer financial services to millions who have a smartphone but no bank account. It could fundamentally change how capital moves around the world. This isn't a simple David versus Goliath story. It's a complex dance of disruption and adaptation. We are literally watching the reinvention of money in real time. But what do you think? Will stablecoins eventually replace the old card networks in a decentralized future? Or will giants like Visa successfully absorb this new tech and build an even more powerful hybrid system? Let us know your thoughts in the comments below. And if you want to stay ahead of the trends shaping our financial future, make sure to subscribe. The battle between Visa and stablecoins isn't a fight to the death. It's a slow-motion showdown that will define the next era of global commerce. A seismic shift has already happened, with digital dollars now moving more value than the world's biggest payment network. But the old guard isn't standing still. By weaving stablecoins into their own systems, They're positioning themselves at the very center of this new financial world. The final outcome is still up in the air, but one thing is clear. The money in your wallet, whether it's physical or digital, is about to get a whole lot faster, smarter, and more global. The showdown is happening now, and the winner won't be a single company, but the shape of the financial future itself. Subscribe for data-driven breakdowns of trade, tech, and money. Signals, not slogans. History rhymes. Power rebrands. Stay inquisitive.